Hey everyone, it is Thursday, July 23rd, 2026. I have not been streaming or filming for a while. I went out to Vegas, Las Vegas, uh, over the past weekend, and I got to see some very interesting things. For the most part, I do not in any way, shape, or form care about what the speakers have to say. I like to go out to these conferences and conventions to meet various people. You meet some really interesting people, specifically the attendees. But also, there were some presentations at the beginning of the conference where they showed the technology that is being worked on right now and that is going to come out in the foreseeable future. Now, the foreseeable future may be 6 months from now, it may be a year from now, it may be 2 years from now. It's safe to say it's by the end of the decade. But what is coming in the finance world uh, is really, really interesting. And I think what's happening here is with the technology that's coming is very similar to what we saw happen in the finance world during the late 90s and the 2000s. As we started the 21st century in the finance world in Wall Street, basically you had an ecosystem across America of various individuals that were clerks, floor traders, brokers, individual stock specialists, and market makers of various types across multiple exchanges across this country. And you also had other traders that were at the desk. They were called upstairs traders at the time. And you had all these brokers across the country and this entire ecosystem of literally hundreds of thousands of people across the country working at various brokers, exchanges, and so on and so forth. And in 1997, that was when computers first made their debut on the Chicago trading floors. And that was kind of the quintessential marker where, as technology and the internet were evolving in 1997, they kind of made their presence known. And it wasn't just, oh, these computers, back office boys are working at the trading desk and we're doing our thing here on the trading floor in Chicago or New York, and the people are at the trading desk. Well, in 1997, the computers kind of crossed over and actually were allowed on the trading floor. And it didn't change or affect what was happening on a day-to-day basis across various exchanges, but the virus, as many floor traders call it, the evolution began. And it was a gradual process because floor trading continued for many, many, many more years after that 1997 point of time when computers were actually on the floor. And by the end of 1997, the internet was also a thing that people were using. So the evolution of technology, computers, the internet was a thing that was happening by the end of 1997 and into 1998. But the old legacy way of going about everything on Wall Street continued on, even though things were slowly and gradually changing. And what I found interesting, because I started trading, I never traded on the floor. I always traded from a computer. I've always been an electronic trader, a computer trader, an upstairs trader, whatever you want to call it, because I started trading in 2005. But those early couple years, 2005, 2006, 2007, and specifically, it really became more and more of a thing in 2008 and 2009, where like all these floor traders were going extinct and they didn't know what the heck was going on, and they did not know what the heck they were going to do. What I remember at that point in time is being shocked that they were so shocked. I'm like, guys, this is the writing on the wall has been here for easily a decade. Why are you guys still here on the floor trying to scrounge up every single penny? You guys need to move. It's not like Wall Street's going away. It's just that this trading arena that you're in is no more. You guys have to evolve, adapt, change. And there's a great documentary about this. It's called Floored. It's spelled Foloored. And the documentary was filmed in 2008 during the financial crisis, and it was released in 2009, and it shows that evolution of computer trading taking over and the floor going away, the trading floor going away. This past weekend, when I was in Vegas, seeing this technology that people are working on, I can easily see other parts of the finance world easily go away and become extinct. I don't think it will happen overnight, but I can easily see this AI take over specific areas of the finance world that there's a lot of people that work in those areas. And I want to say, my gut feel is that the same thing that happened with the floor traders, me being shocked that they are shocked that their jobs are going away, that same dynamic could happen with elements of the finance world going forward. And I think those jobs that could easily go away or become extinct, or basically still be around but they're not able to make any money anymore, are wealth advisors, financial advisors, financial planners, brokers, if they're still around. I don't know. But people still have brokers, high-end brokers. Those can be gone. And if those jobs can go away, it's easy to make a leap and say, then why do you need a real estate broker? Couldn't AI replace that as well? So we'll see what happens. But the technology that I saw this weekend at the conference in Vegas really shows that what's coming is that AI is going to replace all the professional financial advisors that are out there. And wealth advisors, portfolio advisors, all those types of registered investment advisors, all those different types of people will easily see their jobs go away. Or they'll still have customers, like people that don't want to use AI. But because AI is a competitor, it's going to drive the fees down lower and lower and lower and lower and lower. So you'll have a financial advisor in the next couple years bitching and complaining because he's like, I used to make $100,000 a year. Now I'm only making $20,000 a year because AI is taking away the fees. I can see that happening in the future. So their jobs aren't just going to disappear. It's that they're going to make less and less and less as AI becomes more of a force as time goes on. And that's essentially what happened with the floor traders. They stayed on the trading floor, and the computer made it so that the floor trading didn't go away. It's just they were making less and less and less on the trading floor versus the amount of volume that was being traded on the computer. And eventually they came to the conclusion that the party's over and they had to leave. And I can see that same type of process happening with financial advisors of all types. And like I said, I don't know if this is actually going to happen, but I could see it happening. Is real estate brokers or real estate advisors or those types of people, their jobs being replaced as well. I'm not saying it's going to happen, but never say never with AI. I don't know. So. Okie dokie. I'm gonna take a look, go through some charts here. Take a look at a few different stocks that look interesting. I'll start out with Bloom Energy. Uh, it's had a nice pullback. It's bouncing off the lower Bollinger Band, and I like how you have a nice crossover here on the oscillators, and I think you can nibble on it here, uh, but I'd like to see it go up a little more. Let's take a look at Micron. That's just a beautiful chart, right below the 20-day moving average. The slow line has come all the way down and is starting to kind of pop its head up a little bit, flatten out here as you have the fast line cross back above the slow line, and it is now positive as the rate of change is now positive. As the stock chart trades down to the lower Bollinger Band, it bounces off of it right to be just below the 20-day moving average. This is like an optimal buy point for me. I like it when it bounces off that Bollinger Band. You get a crossover in the oscillators, and you're just below that 20-day. Now, I have already bought a new round of calls in Micron. And those calls that I bought were, and here is a chart of Micron for the past couple trading days. So it has completely reversed from selling off to now getting gap open higher. Gap open higher and is trending higher. So you see it here more clearly on the intraday. Now, when we go to the trade tab here on Micron, take a look. The stock still has very high implied volatility. The expected move for the next 4 trading days is $72 with an 86% implied volatility. And I think you can go ahead if you have enough money to do it. Not everybody has, over $30,000 in their account, but if you have enough money to do it, what I did is I bought the 990 calls that expire in 4 days. So I bought these 990 calls that expire in 4 days, looking for Micron to trade towards the upper Bollinger Band here and retest the previous highs that it made in mid-June. Now, the upper Bollinger Band is below this peak here that it made in mid to late June. But I still like this trade setup here right at the 993 level on Micron. And look for the stock just to move up towards, at least test this upper Bollinger Band right around 1187. You're getting the confirmation in the oscillators, and I love how this slow line is starting to flatten out. It's ready to turn back up, and that tells me that the stock can easily not go to the upper Bollinger Band, but also make new highs. I think that can easily happen, especially because the stock has made all-time highs on the weekly charts. So it's come down. When we look at the weekly charts here, the stock has made highs on the weekly charts, on the fast line and the slow line. So that sets up for another all-time high in the future that has yet to happen on the weekly charts. So going forward, I'm continuing to stay very bullish on Micron, And I think that this recent pullback is a great entry to buy the stock right here. Um, and that's all I have to say about that. Let's take a look at a few other stocks. So, like I said, I did buy those calls in Micron. Let's see. Took a look at Bloom Energy. I like the way it's bouncing off this lower Bollinger Band, but I kind of would like to see it a bit higher. But I'll keep my eye on it. Corning. It's had a big sell-off recently. That's holding here above this lower Bollinger Band. And you have a nice divergence in the oscillators here. And let's see if this you get a bounce here in the stock chart in Corning. We're taking a look at Callistica here. I like this chart. Again, right below the 20-day moving average. I like that when a stock has a big sell-off after making a big up move and being in an uptrend, and it's right below that 20-day moving average. So right here is a perfect time to get in, and you got a crossover on the rate of change oscillator. It's in the positive now. You got a crossover signal, buy signal here on the 310 oscillator, and now the fast line is in the positive area. On the weekly chart, you see how the slow line's kind of rolling over. It's still in an upward trend higher, but it is rolling over. It's something to keep an eye on. But I do like the fundamental story for for Callistica. I'm bullish on the story. I'm bullish on the fundamentals. I like the way the stock is bouncing after having a pullback. Let's go back to the daily chart here, right below the 20-day. You can look for an easy move up to 377. And if you get a slow line that gets back into the positive territory, you can get a move up towards 415, 412, 413, 415, and up towards 450 and 475, where it can possibly break out to the upside. So it's worth something to take a look at, and maybe worth taking a shot. The stock was up earlier today. Now it's down. So it's just not getting the follow through that I would like. One stock that's moving a lot today is Comfort Systems. This is a stock that I do not own, that I follow very closely. There's always those stocks that you watch closely that it's on like your shopping list, but you always like never buy it. But you never buy it, and that is now the camera doesn't work. Oh. Anyways, let's just keep doing it without the camera. Oh, I guess the camera does work. I just have to push. There we go. Okay, so let's take a look at Comfort Systems. So the stock has had a nice consolidation. Comfort Systems has had a nice consolidation back and forth, and after a huge run up over multiple months, it was ready for consolidation, ready for a pullback. So I like the way it came back and had this back and fill type of action. And now it's taking out its previous lower highs. It's now above the 20-day moving average, and it's ready to go back up and test that upper Bollinger Band and test these previous highs right around the 2059 to 2060 level. I think that's a good target for this stock right here. And you can use 1800 as a target to the downside, and use that 2069 to 2070 level as a target to the upside for Comfort Systems. And I think this stock chart looks really nice here, and it's ready to make a move to the upside higher. Let's take a look at Ciena. I like the way you kind of have like a bull divergence here. So you have a lower low in the price of the stock, but you don't have a lower low in the oscillator. That's a divergence. But I don't think it's yet done going down. It may come down again a little bit and do some more back and fill before it goes higher. And it may need earnings to turn it higher in the upcoming weeks when it comes out with earnings. Let's take a look at SK Hynix. This is the closest competitor to Micron. And the stock is it is acting okay. You know, we're starting to we can see oscillators now on this chart here in SK Hynix. They do trade options. Let's take a look at the options here on SK Hynix. So we go out 8 days. We have a $30 expected move of a stock at $168 a share. 149% implied volatility. So if you compare that to Micron, it's got an 85% implied volatility with a $70 expected move for the next 4 days. It's gone 8 days. It's 120% implied volatility. And SK Hynix is 149%. So the implied volatility at SK Hynix is a little bit more than Micron, but they're very close when you look out over the next week or so. So far today, I like the charts of Micron. That's the chart that I like the most. Let's take a look at Western Digital. I also love the Western Digital chart. So Western Digital chart, it's the same basic setup as Micron. Right below that 20-day moving average, having a nice correction, bouncing off of the Bollinger Band. You're getting a buy crossover in the oscillators, and the stock is ready to make another run after having a nice pause. I also like Comfort Systems here. It's just above the 20-day. Still a good buy point. Maybe a day or so late, but I like it. Let's take a look at Vertiv. Ooh, that chart looks fantastic as well. Right below that 20-day. I like it right here. That's the spot. This is the spot. So I'm going to go through these 3 charts so that you can, because they all look the same, and they all basically are like fantastic chart setups that I look for. So I'll look at Micron here. Right there at a buy point. Western Digital, right there at a buy point. And we'll take a look at Comfort Systems. This is a stock that is a little bit above the optimal point to buy the stock. Just above the 20-day moving average. But that doesn't mean that you can't go and buy it, okay? The stock can easily go higher from here. It's just that I would have liked to have bought it right here below 1800 instead of above 1800. But it's still considered an early entry, I think, because the momentum traders, the buy high, sell higher traders, they're going to look to buy Comfort Systems once it gets closer to 2,000 a share. And that's why I like it here near the 20-day, because it's like an early entry, getting in before the momentum guys come in and buy it. So that's why I like to buy after the stock bounces off of the lower Bollinger Band before it gets to test these highs, because once the stock gets to these levels, it starts popping up on all these traders' screens, and it starts picking up really quickly. A lot of times you can buy a stock here, right around here, around the 20-day, and it may bounce around and go sideways for a couple of days and then makes its move up real quickly. And I don't mind waiting it out. I don't mind waiting stuff out like that. Let's take a look at SanDisk. I think it's still a little early, but I think you could still buy it here. I think this looks nice. I think SanDisk is still a little bit behind Micron and Western Digital and Comfort Systems, but it's basing out nicely here, and it may not make its big move for a couple days. It may continue to go sideways and chop around for a little bit before it gets close to the 20-day, and then you start to see some momentum to the upside. Let's take a look at Seagate. It's a little bit ahead. It's above the 20-day. It's starting to gain momentum to the upside, and an early stage breakout here, retesting its previous highs right at that 941 level. So I like Seagate here. So stock that I've been following very closely is Marvell. And I like how it's bouncing off the lower Bollinger Band. It's kind of reversing it's a trend down that it's had. I still think it's early to buy it here, but it is something that is on my watch list, and I like it here. But if it has a big up day and trades above, let's see here, if it trades above this trades above 215 a share, you know, above that 214.53 level to 214.92 level, I think Marvell is worth a play. It's worth a trade to buy some calls. And when I do that, I'll probably look to buy the July 31 calls, the July 31 expiration calls, and the at the money calls for Marvell are going for about 13.30 right now. So a little bit in the money. These calls are going for $14.50. Those calls that are slightly in the money. Right now, those calls that are slightly in the money are 58 deltas. Those calls that are just in the money are 55 deltas. They're going for about 13.30 with Marvell right now. So, with that said, what do I want to do for a trade, or is there anything to do for a trade as we head towards the closing bell? It is 3:49 right now. Right now, I do have calls that I bought in Micron. And I bought the calls that expire on the 27th of July. And the calls that I bought are I was up all day. Now I'm down. Gosh. I'm not down a lot, but I am down a small amount on the day. This market is just in chop mode, really sloppy. It's doesn't have a lot of gusto. It's in a trading range. It's just a tricky, sloppy market right now. Micron's taking me down. But I do have the 990 calls right now. So the calls that I bought are now out of the money. So I bought these calls. When I bought these calls were right at the money. Now they're slightly out of the money. They're 47 delta, so I'll continue to hold them. I'm going to hold these calls overnight. 990 calls. We're looking to see if there's anything else that piques my interest, as we have 8 minutes left until the closing bell. And with this market right now, I'm more inclined to buy calls right as we go into the closing bell. Hold those calls overnight and manage those calls tomorrow morning after the opening bell. So That's what I'm looking at with this market, is to buy calls to hold for a swing trade overnight. Credo up 4.95% on the day. Sorry, this is GE Vernova is up about 5% of the day, but Credo's up 1.79% on the day. Another stock that I like is Dycom. I have a big history with Dycom because Dycom was a big stock that my dad owned in the 90s. He made a lot of money off of that stock in the 90s. And that is a fantastic chart. Beautiful. Right below the 20-day, like I like to look for, and you have that crossover in the oscillators. Beautiful. In a perfect world, this slow line would be turning up and going into the positive. Just because it's in the negative is not necessarily bearish. That just means that the stock just had a correction. You could actually make an argument that that's a more optimal point to buy the stock because it's completed its correction and now it's due to go back into the positive. Especially if a stock has strong fundamentals, good earnings, and a great chart. So, the fast line, those oscillators move first before the slow line. Hence, fast line, slow line. But right at that 20-day, oh, I love this. I'm going to buy some calls now. In Dycom doesn't have weeklies. So I have to go out to August, and I'm going to buy the 440 calls. We've got 5 minutes left until the closing bell, and I'm going to buy the. Let me just turn on the volume here so you guys can hear the ding. Right? You want to hear the ding. You want to hear the trade get filled. I'll show you on the screen in a second the calls that I'm buying on my other computer here. But they're in August, the regular expiration August calls, because Dycom does not have weeklies. So let's get a fill here. There we go, ladies and gentlemen. There we go. The ding. That's what we all love. The ding. A good fill is better than bad sex. I'll say it strongly and proudly. So I got filled in Dycom calls. Now, let's take a look at these calls that I bought in Dycom. As you can see here on the screen, I pull it up on Thinkorswim. You can see that there's no weeklies in Dycom. There should be. This is not a stock that's talked a lot about in various news outlets, financial media outlets, but the stock has been around for a long time. It's actually a local company for me. It's based in South Florida, and like I said, there's a history with me, as my dad owned a lot of shares in the 90s and made a lot of money from it in the 90s. And the company is kind of having a revival right now with AI. It made a lot of money in the 90s as they built out the fiber for the internet, and now they have to build out all this fiber for the data centers. So the stock is having a revival over here. So the fact that it has a great chart set up and I can go in and buy the calls, this is fantastic. I love it when there's a great chart and you love the fundamentals and you love the story. That's when everything kind of lines up. The stars align, per se. So I bought the August calls, and I bought the 440 calls. That's the strike that I bought. I bought the 440 strike that expire in August. And that's about what I paid for. I paid about $33.10. Let me see. Actually, I paid a little more. I paid $29.50, and right now those calls are at $33.30. So far, I'm making money, baby. Giddy up. And we are getting close to the closing bell. 2 minutes and 27 seconds to the closing bell, everyone. But I just want to show you these calls. You could probably get filled for about what I paid. $29.50 or $30, maybe in 50 cents, maybe a little bit more than I paid. But right around $30 is where you can get filled for these calls, and you have a little bit of time. You have 29 days till these calls expire. So, because they are regular monthly calls. But I love Dycom. I'm a big fan of that stock. I've followed it for a long time. Like I said, it's a local company. So I love it when that stock chart is set up perfectly. I can't help myself. And coming on and recording helps me go and do it. Recording this day like this at the end of the day helps me find good setups and good candidates for trades. I'm kind of killing two birds with one stone. I like this. So I'm going to keep doing this. If I was not recording today, I would not have found this Dycom trade. So that's what we like, right? And if you can't buy the calls, buy the stock. Buy a couple shares, whatever. Got that crossover. You get right below the 20-day. You tested the lower Bollinger Band. And I like this too. See how you have a lower low in the stock, but you also have a crossover and a higher low in the oscillators. You have that divergence. That's a very bullish sign too. It's ready to test the upper Bollinger Band and test that previous swing high here. I think the probabilities of getting to there are high as long as the market doesn't roll over. Okay. If the market doesn't roll over and goes sideways or a little higher, Dycom will get back up to 505. Especially with a company like Dycom where nothing's changed in the story. Okay. So, with that, everyone, the closing bell is right there. So we are done for the day. I am signing off. And I will talk to you guys all later. Take care. Bye-bye. Adios, everyone.